So we are now stepping into a new chapter. The chapter name is Financial Statements of a Company. So in this chapter, what we are going to learn, if you ask, it's very simple. We are going to learn the formats of balance sheet. Okay, we are going to learn the balance sheet format. Okay, it is not the same format what you learned in grade 11. So balance sheet format. Then you'll be learning the format of statement of profit and loss, which we always call them as income statement. How do we call the statement of P&L as? P&L is otherwise known as, hello,
Income statement.
little bit louder please. We call it as income
Income
statement.
statement.
Very good. And then we'll be learning the term something called as notes to accounts, and also we'll come to know something called as cash flow statements. So these are things which we are going to learn in this chapter. And yes, of course, okay, even for cash flow statement, this is a format which is very important. Okay, and apart from this, we'll be learning the concepts of objectives. Okay, objectives of financial statement analysis. So objectives of financial statement analysis, then the limitations of financial statement analysis, and yes, we'll come to know the parties interested, parties interested in financial statement analysis, and also you'll all come to know about the differences between provisions and reserves. Provisions versus reserves, and yes, the concept of major heads and subheads. So you will be given some items, you should understand whether what is a major head for that item and what is a subhead for a given item. And then to analyze whether a given item is a current or a non-current asset or liability based on its operating cycle. So the next one is all about operating cycle and computing current or non-current assets or liabilities. So these are things which you are going to learn from the chapter number 1 in part B. Okay. So the name of the chapter, as I already said, it is Financial Statement Analysis. That is part B. In that, financial statements of a company. So the chapter 1, okay, this chapter 1. The name of this chapter is Financial Statements of a Company. Okay, so here the word says is it is financial statements. So when we say about financial statements, your balance sheet, your statement of P&L, notes to accounts, and cash flow becomes a part of our financial statements. In which you know very well that balance sheet is also known as positional statement. What is the other name of balance sheet?
Positional statements.
Very good. Okay, the other name of balance sheet is positional statement, and the other name of your profit and loss account statement of P&L is income statement.
Income statement.
And then the other name, okay, for financial statements, if you see, there is no such other names. Okay, financial statements are the statements which shows the financial position or the financial, okay, statements of a company. There is income statements. And this notes to account is common. Okay, you will find this notes to account common for both balance sheet and profit and loss. So notes to account is nothing but it is a part of, okay, balance sheet and profit and loss. So it is also a financial statement which will give you a detailed information about the items appearing in P&L or in the balance sheet. And finally, cash flow statement. This statement provides you the information about the inflow and outflow of cash and cash equivalent. Okay, inflow and outflow, okay, of cash and cash equivalents. Okay, so this is what we are going to learn from this chapter. So first, let us go and explore what is the format of balance sheet, and then we'll learn something called as items that has major head and subheads. Remember, there are 121 items, okay, with respect to the major head and subheads. So there are some 121 items. When you talk about the major head and subhead, you have got an item of 121 items. We should understand what is the major head and what is the subhead for a given item. Okay, so first let us go and understand how the balance sheet of a company will be and on what basis it has been prepared. So first and foremost, you should know that balance sheet of company, okay, the first one we are going to learn is balance sheet, okay, format. Remember, the format of balance sheet has been prepared, okay, based on schedule 3 part 1 of Companies Act 2013. This is very, very, very important. Okay, that is what they have mentioned here on top. Okay, the format of the balance sheet, okay, which has been prescribed in part 1 schedule 3 of Companies Act 2013. That is the same thing which I mentioned here. I mentioned first the schedule. Okay, so schedule 3 part 1 Companies Act of 2013, and then you can just see how the heading goes. First you have to write the name of the company. So whichever company you are going to prepare the balance sheet, the name of the company should be as a center. Then you'll write as balance sheet as at. Okay, balance sheet as at. Followed by that, you are going to have the columns as one particular column, and then you'll have one column as note number column, and then usually, okay, if you're going to do the balance sheet only for the current year, then you'll have only the figures as at, okay, end of the current year. That is very much important. If you are doing do some comparisons, then for the comparison purpose we need the figures of the previous year also. So always remember, okay, the first column will be representing the current year data, and in the second column will represent the previous year data. Okay, so first particulars column, the next column is a note number column, and then the current year data and the previous year data. And amount should be in terms of rupees if you are going to prepare it for India, or if you're going to prepare it for any other company, okay, which is not of an Indian origin but having its business in India, then obviously, okay, you will have to represent in terms of the respective currencies, okay, which we follow in that particular nation. So that is based on the what concept? Money measurement concept. Okay, so based upon the home currency, we have to represent data. So in India, we follow rupee symbol. So rupees will be mentioned. Okay. So coming up to the concept. In grade 11, you would have learned your balance sheet looks in this pattern. In grade 11, if you just ask me, you would have seen that your balance sheet will be in such a way like balance sheet as at the year, okay, either it is 31st March means March or December means December. Okay, the respective year will be marked here. You will have two columns. One is liabilities amount in terms of rupees, and then you'll have the right hand side column as assets amount in terms of rupees. So below liability, you will be recording the items like capital value. With that, if it is a profit, just a minute, if you are getting a profit, profit will get added, or if you're getting a loss, loss will get subtracted. And yes, if you're getting interest on capital, that will be added. If any drawings has been done, that will be subtracted from the values. And then if there is any interest on drawings, that will get subtracted. So all these things after the final value, you will record it in the outer column, that is the closing capital. Next, you will be recording items such as creditors, then you'll record bills payable, bank overdraft. Next, what else is to be recorded? Any outstanding expenses. Outstanding expenses, and of course, okay, any income received in advance. Income received in advance. So most probably these are the items which we would have seen, okay, and which we would have recorded in the liability side of a balance sheet. And finally, a total of your liability side. The same way, even on the asset side, you will be recording items, most frequent items like cash, which means cash in hand, then cash at bank, followed with debtors or sundry debtors, bills receivable, and then followed by the bills receivable. Okay, you will be recording it as loans and advances. Then you will be recording the items such as furniture. And suppose if you have any furniture which has undergone depreciation, then you will be recording minus depreciation. The net value will be recorded in the outer column. Then the same way, machinery, if it doesn't have, if it's undergoing depreciation, then from the value of machinery, depreciation should be subtracted. The net value will be recorded outside. Okay, then you will be recording your closing stock, and then you will learn items like accrued income, next prepaid expenses, what else, items like goodwill, patents, copyrights, trademark. I hope you are able to capture all these concepts what you have learned in grade 11. Can you?
Yes, sir.
Okay. So these are some of the frequently okay items which you would have used it in grade 11 while you are preparing your final accounts. So items which is appearing in your balance sheet. Yes, of course, this is not a complete items, exhaustive item. I don't mean to say that it's a exhaustive items. It is only a comprehensive items. And then you'll find both the sides of your balance sheet will be agreeing at one particular value which will be equal. Okay, so this is how you learn the format of your balance sheet in grade 11. Okay, but in grade 12, this format we are not going to follow it. We are just going to follow a different format. But of course, all these items will be represented, will be taken into account. We are not going to skip any of those items. But instead of showing them separately, we are going to show them under something called as a major head and a subheads. Okay, now we are going to see what is a major head and a subhead is all about. So you could see here the balance sheet of a company is now showing something as Roman number 1, equities and liability. Okay, it shows something called as equity and liabilities. So what is this equity and liability is? Nothing but the liability side of the balance sheet in grade 11 what you have learned is now getting a name called as equity and liabilities. And then you could see something called as Roman number 2 below that, marking it as assets. It is nothing but it is representing your assets only. So rather than showing it as left hand side liability and right hand side an asset, we are bringing everything under one column. That means we are following something called as a vertical balance sheet. This balance sheet we call them as a vertical balance sheet. In grade 11, okay, the balance sheet what you have followed, it is considered to be as a horizontal balance sheet. What balance sheet is that? Grade 11, this balance sheet we call them as what? This is called as an horizontal balance sheet. ஓகே கிரேட் 11ல நீங்க படிச்ச பேலன்ஸ் ஷீட்டுக்கு பேர் வந்து ஹாரிசான்டல் பேலன்ஸ் ஷீட். ஏன்? பிகாஸ் இட் கோஸ் லைக் திஸ், லெஃப்ட் ரைட் லெஃப்ட் ரைட், ஸோ இட் கோஸ் இன் திஸ் பேட்டர்ன். திஸ் இஸ் அ ஹாரிசான்டல் லைன். Am I right? Basic mathematics. Okay, whereas when it stands in this pattern we call them as a vertical. Am I right? It is horizontal So the balance sheet what we are going to learn in grade 12, we name them as vertical balance sheet. Okay, so this balance sheet, if you see, it is in the vertical form. Okay, in one single column you can see. Okay, on top you have liabilities and on bottom you have got assets. So that's why we call this type of balance sheet as what balance sheet? What balance sheet this is?
Vertical
Vertical balance sheet.
Vertical balance.
Okay, so this you have to remember. In grade 11, the balance sheet what you learned is horizontal, and now you are going to learn vertical. Then yes, you may ask, then we'll never come across horizontal balance sheet in grade 12. No, not like that. You will be using the horizontal balance sheet also in grade 12, but that you will be restricting only with partnership accounting. Okay, you have three books as I said. In one of the books is about completely about partnership, okay, accounting. Only in partnership accounting you will use the vertical, I mean horizontal balance sheet. Apart from partnership, when you switch over to company accounts, issue of shares and issue of debentures, we'll use only this vertical balance sheet. And then the third volume, analysis of financial statement, even in that textbook, we use only the vertical balance sheet. So this is the one which you are going to learn. 11th, you learned only the horizontal balance sheet. In 12th, you will be using both horizontal balance sheet as well as vertical balance sheet, but you have to keep in your memory when to use which balance sheet, in which chapter, which balance sheet you are going to utilize it. Any doubt as of now?
No, sir.
no
Okay,
sir.
now let's discuss more about your balance sheet and its contents. The first and the foremost, okay, the items which have been recorded or which has been highlighted in, okay, yellow here, will be considered as a major head. Leave out the first one. Okay, the first one, equity and liability, is not a head, it is a heading. Okay, it's not a major head, it's just a heading. Okay, the one which is marked in numerical number 1, 2, 3, 4, those items are only called as a heads, that is major heads. Even in this category, this item, okay, share application money pending allotment, okay, is a special head which you will be discussing when the topic comes like issue of shares. Okay, so the items given as number one, shareholder funds, here share application money pending allotment, non-current liabilities, and current liabilities. So these are the items which we consider as a major head, and in which the share application money pending allotment is not a major head, it is a heading which appears in your balance sheet. Okay, so literally speaking, the items which are considered to be as a major head are shareholder funds, non-current liabilities, and current liabilities. These three are the major heads with respect to liability side of a balance sheet. Now, moving on to the asset side of your balance sheet. In asset category, you have got only two items. One is your non-current assets. Okay, non-current asset is one heading, and the second heading is current asset. Remember, this non-current assets are nothing but the other name of non-current assets is fixed assets. So in grade 11, you'd have learned something called as assets broadly classified into fixed assets and current assets. Okay, that fixed assets is what we are going to represent here as non-current assets. Do not use the other name fixed assets as a heading. If you are going to use fixed assets, then marks will not be awarded to you. It has to be used only as non-current assets. Okay, so in asset category, we have got these two items. One is a non-current assets and other one is a current asset. And yes, this should be as per the format how it appears. 1, 2, 3, 4 goes for liabilities. Accordingly, shareholder funds, share application money pending allotment, non-current liabilities, and followed by non-current liabilities should be a current liability. And then in asset category, the first item should go for non-current assets, and followed by that it should go for current assets. You cannot swap the positions. You cannot promote an item from one level to another level. If you do like that, then obviously marks will get curtailed. So you have to stick on to the format and the contents very rigorously. Don't change the items or line items, or don't alter or re-alter the items. Hope I'm making clear to you. Any doubts?
No, sir.
Right. So now let us try to understand what is given inside each of these items, which we call them as a subheads. Okay, we are now going to see what are the subheads that we have under each of these major items. So it's quite simple. The first one, under the shareholder funds, A, share capital, B, reserves and surplus, C, money received against your share warrants. So remember, okay, this particular one, money received against your share warrants, this is not a subhead. Okay, it is an item that has been shown under the shareholder funds after the reserves and surplus as a separate item, but still it is not a subhead. Okay, this should not be considered as a subhead. So the major head shareholder funds, and under that subheads, if you see, it is share capital, reserves and surplus. Whereas this money received against your share warrant should not be considered as a subheads. It's a head that appears, or it is an item that appears under the category of shareholder funds, but please make sure it is not a subhead. And then moving on to the second item, the share application pending allotment, you don't have any subheads for this, so that's the reason we won't even consider this as a major head. And then moving on to non-current liabilities. In non-current liabilities is nothing but any liability which is more than 1 year. So you should understand what is non-current liability. Okay, so non-current, the word still says non-current liabilities. So current means within 1 year. Okay, when you say non-current means, that means more than 1 year. Okay, more than 1 year. If you have any liabilities or any obligations to be paid, okay, or payable, and the time duration for those liability happens to be more than 1 year, then they have been declared to be as a non-current liabilities. So usually under this category, you can see these are some of the examples. What if you ask the term loan from the banks? Okay, term loans from banks, okay, or we see it as bank loans, or okay, the borrowings, long term borrowings, in other words we call them as, when we use this long term borrowings, we can say the borrowings which are done in the way of debentures. This long term borrowings is nothing but the borrowings what you are done in the way of debentures, or from any financial institutes. Okay, any financial institutions. So any borrowings, okay, which we have done in the way of term loans or bank loan or a long term borrowings from, okay, any financial institutions, or by way of issuing debentures, it's a forming part of your non current liabilities. Yes, of course, apart from this, we may have some more items, but these are the quite common items or most frequently repeated items which can be used under the category of non-current liabilities. Okay, so basically a liability which has to be paid, okay, more than 1 year period, we can call them as a non-current liability. And it is, examples are term loans, bank loan, long-term borrowings in the way of debentures or financial institution, etc. Any doubt in this understanding of non-current liability meaning or example in general? Any doubt in this examples? Okay. Now, hello. Can you able to hear me?
No, sir.
Hello. Am I audible to you, ma?
No, sir.
Okay. Okay. Thanks for
Yes,
the
sir.
confirmation. So now comes under the next item. This non-current liability. Examples you can see the subheads are long-term borrowings, and then it says deferred tax liabilities net. Okay, and then other long-term liabilities, and then long-term provisions. So some of the examples we saw here, okay, under non-current liabilities for the example of long-term borrowings. But apart from that, okay, there is something which we can see here as, okay, apart from that, which you could see here as, it's a item such as deferred tax liabilities net, other long-term liabilities, and long-term provisions. So these are all the subheadings of your major head that's called non-current liabilities. Hardly if you see there won't be more than 3 or 4 items appearing as a subhead. Okay, so under each major head you could see minimum of 2 or 3, okay, maximum of 4, not beyond 4. Okay, so it need not mug up the items what comes under this, what comes under that. You can easily understand the concept, and then you can just keep them in your memory. The next one comes under the current. So as you all know very well, okay, current is nothing but the present. Okay, any liability which has a duration of a year, okay, is called as current liability. So current liability is nothing but within a year. Okay, within a year we call them as current liability, or 1 year, or 12 months, or within 1 year if they are given any term, then they come under current liability. So accordingly, if you see under this category of current liability, the first item they said is short term borrowings, quite opposite to your long term. Okay, if you see in your non current liabilities you had long term borrowings, here quite opposite that short term borrowings. The next item, if you see under the category of current liabilities, trade payables. Okay, this is also a current liability, trade payables. And then you have other current liabilities. So even if you see there you had other long term liabilities, here you have other current liabilities. And finally you can see there you had long term provisions, here you are having short term provisions. So almost similar to the items, but with some slight variation in the terminologies. So these are all about your balance sheet. What's going to come on the balance sheet is your share capital, followed by that your non-current liabilities and your current liabilities. These are the major heads, and beneath these items, you come across the subheads which needs to be recorded. Any doubt as of now with respect to your major head or subheads items appearing in the balance sheet up to this as of now?
No, sir.
No, sir.
Right. Now let's move on to the next category. Okay, once you're done with all this, you have to total the column. Okay, that means you need to find out the total of your balance sheet liability side. Next, we'll move on to the asset category. Under the non-current assets, you have the split up such as property, plant and equipment, and intangible assets. Okay, so property, plant and equipment, and intangible assets. Under this category of property, plant and equipment, remember, when you are going to do your projects, you should understand these items very well. Okay, balance sheet என்ன ஏது அதை எப்படி ரீட் பண்ணுறதுன்னு தெரியணும் when you're going to do the project, or when you're going to assess or analyze the company's balance sheet. So here you can see something called as property, plant and equipment. இது short form PPE இப்படின்னு represent பண்ணிருப்பாங்க. If you see any company's balance sheet, okay, or any company's cash flow statement, they would have marked it as PPE. PPE is nothing but it's a short form for property, okay, plant and equipment. Okay, so property plant and equipment அப்படின்னு சொன்னா அதுக்கான ஷார்ட் ஃபார்ம் என்னது PPE. Okay, சரி. Now let's see what are the items that comes under PPE. So the first one, property plant and equipment. Say for example building, okay, or vehicle, okay, or any other, okay, machineries, equipments, then they will be considered to be as a property plant and equipments. And then if suppose you are coming across some intangible assets such as goodwill, patents, copyrights, trademarks, computer softwares, and then recipes, formulas. So all these are an example of an intangible assets. They are intangible. Okay, if you ask, no, they are not tangible. They are intangible, but they all are fixed assets. So that's the reason it is been categories under the heads of non-current assets. Okay, under the category of property, plant, and equipment, intangible assets. We are denoting this as an intangible asset. The next one after this intangible asset is capital work in progress. What's the next item? It's a capital work in progress. Remember, okay, a equation what we learned in grade 11. In grade 11, we learned something called as accounting equation. Okay, assets is equal to liabilities plus capital. This we denoted as accounting equation, or we otherwise denoted this as what equation? Accounting equation is also known as what equation? Hello. Accounting equation is also known as accounting equation is also known as what equation, Gana? Just recollect. Assets is equal to liability plus capital is a okay. It's your accounting equation. What is
Balance sheet equation,
very
sir.
good? It is also known as balance sheet equation. Now, a part of an asset. So, if suppose you invested some cash, then the part of cash is an asset, and also it's a capital for us. Okay, so that means if any capital is being invested, and out of that capital, if any, okay, asset is being developed, then unless and until it becomes a complete, okay, it becomes complete, it becomes a completion, the work gets completed, it can't be considered, okay, as a full-fledged asset. We call them as a capital work in progress. Okay, say for example, I have a vacant place surrounding my business premises. Okay, I have a building where I'm running my business, and I find that there is a vacant area of almost 1.5 grounds. Now I am decided to, okay, build something in that 1.5 ground. So I have to invest some money on the construction of that building. What I plan to do it currently. Of course, the entire completion of the work will not happen in a year's time. It will take more than a year time, because it's something which I have to make sure that the quality, okay, and the firmness, everything is there, because it's going to have to sustain for longer period in my business. So when I started the work of constructing something in the vacant area, and then, okay, if suppose it's still not got completed, it is in progress, we call them as capital work in progress, which is an asset for a business, because I have started the work. To some extent, the formation of the building or the shape would have completed. The remaining work will have been Okay, it should have to be completed. That means some pending items are there. So it doesn't mean that the work has not been started or not been completed. It has been completed to some extent. The remaining is yet to be done. So that's why we call them yet to be done as work in progress. So it's a part of a capital. We call them as a capital work in progress. Okay. The next one, if you see, it is intangible assets which is under the development. So if suppose any okay development work is going on, like research and development R&D, okay, you will be having a team called as research and development R&D team. So R&D is nothing but research and development. Okay, it is called as research. So research and development. Under this, okay, research and development, you keep working on some okay major issues and you try to bring out a result for a particular issue. Okay, so thereby you're doing some research and you're developing something. So we call the team as R&D team. And here you can see if there are some intangible assets which is under the development, okay, then we will be declaring this as an asset and under the category of non-current assets. So for example, during the COVID situation, the COVID-19 2019-20 period, whereby the entire nation was affected by a pandemic called COVID, and many country has started or they were in the urge of okay finding out some alternative or some sort of immunity boosters, or we say it as a vaccine for the COVID-19, and they have made various tests. One of the most popular or one of the most successful results were Covaxin and Covishield. Of course, there are many okay items which have come to the market after that, but still these are primary items, or which we say these are the two okay important vaccines which were being used to save the life of many people. But unless that has come out as a final product, the respective company, whoever has designed that particular okay vaccine, would have gone on development stages. They might have been in the research and development, they would have finding out something, so they would have not come to a final conclusion that this is the value, okay, this is the item. They were just in development stage. That means you can only feel the result once if it is successful. For example, they have found a vaccine. That vaccine only if we inject to the affected person, and if the affected person gets cured, okay, he becomes to normal, then you can only feel that yes, his body has recovered. The changes you can just see to it, but you cannot touch them, you cannot see them, okay, you can only feel them, okay, how it was earlier, now how it works. So that is the reason it comes under the category of intangible category. Okay, so we call this as an intangible asset which is under development. So like this, whatever the items that is gone for a development, we call them as a okay intangible asset under development. Clear? Any doubt in the non-current asset category with respect to the major head and its subheads as of now?
No, sir.
Right.
No,
Moving on,
sir.
moving on to the next one, non-current investments. So investments, any investment that what we do, okay, is a asset for us. Take for example, it's a live example which we can see in each every one of our house. Probably we all might be staying in a own house or in a rental house. But let us take an example. We all are having our own house. Okay, we are staying in our own house. Okay, to live we have one house, but still our parents must be earning person. Both of them might be an earning person, whereby they may even find that okay, why don't we buy one more property? Some of our parents might be having more than one house, which means one would have been gifted to them by their ancestors, like your grandfather or their father or mother, and one property they would have purchased it out of their own savings after they started to take up the எம்ப்ளாய்மெண்ட். ஸோ தாத்தா பாட்டிக்கிட்டேன்னு வந்தது ஒரு வீடாக இருக்கலாம், அவங்க சொந்த சம்பாத்தியத்தில் வாங்கினது ஒரு வீடாக இருக்கலாம். நம்ம இருக்க போகிறது ஒரு வீட்டில், ஆனால் இன்னொரு வீடு எதுக்கு வாங்குறோம்? இன்வெஸ்ட்மெண்ட் பர்பஸ். Let that particular house, okay, earn some revenue like rental income, or let us switch over to this place which is developing area and already developed place is there. Let we, okay, give it on rental basis, so some extra money will come out of it. Or you have got a bumper lottery, or you have got, okay, some bonus or incentive. Obviously in our house they used to say, don't waste the money, go buy some gold ornaments or try to invest in some land or property, try to get some asset for you. So that means it is a concept whereby, okay, when you get some additional earnings, we try to do some investment. Okay, that's what investment will say. And even sometimes when you are going to purchase any plot or any, okay, houses, the particular builder or the broker, through broker, if you are going to go, they may ask you, are you going to purchase this for your own self consumption or for investment purpose? So that means he himself used a word called investment. So whenever we are purchasing any asset, okay, such as properties like house or any gold bonds or gold ornaments, okay, it's purely for investment purpose. We are investing our money on it. Okay, so it can be for a current, that is for a short period, or it can be for a longer period. If it is for a long duration, we call them as non-current investment. Okay, now you may ask me, okay, so only these two can be invested? No, not like it. A person can also invest the money on any company shares or debentures, or in any of the banks schemes like mutual funds, okay, or else recurring deposits or fixed deposits, whatever it is. Okay, they have a cycle, they have a period. So if anything is for more than a year, then it comes under the non-current. Okay, if it's anything more than a year, it's a non-current. And if you have done an investment, then we call them as a non-current investments. So it's purely based on the period or the tenure of investment. And then comes something called as your deferred tax assets net. Okay, deferred tax assets net. If you can just see in your liability category, you were having something called as, okay, a term called as deferred tax liabilities net. So this is under what category? Non-current liability. In the same non-current assets category, you have been given something called as deferred tax assets net. Okay, so this is how the two different items that you have to make it very clear. And then comes long-term loans and advances. Okay, there is a term called as long-term loans and advances. And finally, you have something called as other non-current assets. Anything which you cannot record in the above mentioned items will be recorded separately as an other non-current assets. Any doubt up to this concept? You have been, okay, understanding something called as a balance sheet, company's balance sheet, and then we are following something called as a vertical balance sheet, where you have been given with your items of liabilities and items of your assets. If you have any doubt up to this category of non-current, please get it clarified. Then we'll switch over to current assets. Any doubt up to this?
No, sir.
No,
Right.
sir.
The next one, if you see, it is all about your current assets, which means the word says is very clearly current means it is for a time period of 1 year or less than a year. Okay, so current assets 1 year, okay, or less than 1 year will form part of your current category. So current assets, what are the items if you ask? The first and the foremost is current investment. So quite opposite to your non-current investment. If the investment is for a short period, it's a current investment. Inventories. Inventories are nothing but, as I said, it is your stock. The closing stock is an inventory. The next is your trade receivables. This is trade receivables are nothing but your debtors. Okay, trade receivables are your debtors. The next is something called as cash and cash equivalent. So the term cash and cash equivalent consists of cash in hand, cash at bank, marketable securities, and then drafts, bonds, okay, the government bonds, treasury bills, etc. Okay, so these are the items that is found under the category of cash and cash equivalent. And then you have something called as short-term loans and advances. If you are able to understand your non-current assets where you have long-term loans and advances, quite opposite that is your short-term loans and advances. Okay, and then finally it is other current assets. Any asset, there's any current assets which you cannot accommodate in the above mentioned heads or the subhead, you will be able to record it under the category of other current assets, and then the total must also be equal. Okay, which means the total, okay, this particular total of liability and this particular total of asset must be equal. The same way, okay, this particular total of your liability and this particular total of your asset must be equal. Only then we declare that the balance sheet is perfect and it is pakka. So this is just the contents, okay, of your balance sheet. Probably I want you all to take up the format of balance sheet, how it will appear. Once you are done with your balance sheet, let me know. We'll switch over to your statement of P&L. Is it clear to you all?
Yes, sir.
Yes. So kindly please, okay, make a note of this. The balance sheet of the company, okay, will be as per the provisions of Indian Partnership Act. Sorry, I'm sorry. It is as per the what? Companies Act of 2013. Okay, so we are following the Schedule 3, Part 1 of Companies Act of 2013, not the Partnership Act. I'm extremely sorry to use the word Partnership Act. Okay, so part 1, Schedule 3 of Companies Act 2013. So kindly write that and then you just copy down this format as how it is. Once you're done with this format, let me know. We'll move on to the format of your P&L. Yes, quickly complete it off. Once you're completed, let me know. When you're writing it, just don't write it for the name's sake. Read the item, understand the item, and then write down so that it should be in your subconscious mind forever. Okay, just don't do it for namesake. The items whatever you're writing it should be done with intention that you have to understand it and you have to learn them. Don't have the intention to just write okay for namesake. If you have completed, let me know, please. Once you're done with your liabilities, please let me know. So I'll scroll down for asset category also.
Completed, sir.
With both asset and liabilities, or only the liability?
Liabilities.
Liability got over. Okay. Then now switch over to your asset category. Make it fast. Completed the asset category. If yes,
Completed, sir.
Yes,
okay.
sir.
If yes, let me know. Okay. Others also, please do let me know.
Completed, sir.
Completed, sir.
Okay. o- Okay. One more. I think they have to give the response.
Completed.
Right. So I hope by now you have got some clarity about how to present the balance sheet of a company as per Schedule 3, Part 1 of Companies Act of 2013. Okay. So we don't have any other rule. This is the rule which we follow for presenting the balance sheet of a company. Now, let me show you the format of your P&L, that is income statement. Kindly take down the format of income statement first, and then we will discuss about the format of the income statement in detail. Okay, is it clear to you? Can you able to view it? So this is a statement which we call them as statement of balance, P&L. Okay, even the statement of P&L, okay, where you can see you have to follow as per statement format of P&L as prescribed in what? Part 2. For first balance sheet you are using part 1. Okay, for P&L you are using a term called part 2. Okay, so here you're using the word called as part 2 of schedule 3, okay, of the Companies Act of 2013. Okay, so you call it as part 2, not part 1, part 2. Okay, so the format should have the breakup and title properly. Part 2 of Schedule 3 of Companies Act of 2013. Do it carefully, write down items carefully, and then you just prepare the format. We'll discuss the format, okay, once they're taken up. Quickly complete the format of your P&L. Hope if everyone has completed your statement of P&L, that is income statement, please do let me know.
Completed, sir.
Okay, let's wait for others also to.
Completed, sir.
Completed, sir.
Okay, right.
Completed.
Okay, now let's try to explore what is given in your statement of P&L. Okay, as per the Companies Act of 2013 in what? Schedule 3. Which part? Part 1 or part 2?
Part 2.
Part 2. So don't get confused. Part 1 is given for balance sheet, part 2 is given for P&L. Okay, so this is how it goes on. Now, the first item which you're going to represent in your P&L is revenue from operations. Remember, this revenue from operations is nothing but it is representing your net sales. Okay, as you know very well, any business organization, whether it is involved in a trade activity or in the service providing activity, the ultimate, okay, objective of any business to earn profit, and that will come only from their core business operations. So any business operation in which you are engaged with or in which you are involved in, then any revenue, that is the sales, when you're doing that particular activity, we call those revenues as revenue from the operations. So it is purely net sales. When a word used as net sales, remember, okay, net sales is nothing but from the total sales you subtract the returns. What returns? From the total sales you subtract your sales returns, you'll get net sales. What is the other name of sales returns, Kana?
Returns inward.
Return
Very
inward,
good.
sir.
Very good. Returns inward. Okay, so net sales, or we call them as, okay, total sales minus sales returns, or total sales minus returns inward. So this is how you'll get the first item that's called as revenue from operations. Okay, the other one is called other income. So other income is nothing but you would have learned in your grade 11, okay, your trading account, profit and loss account, and balance sheet. Okay, just to recollect that, I'm just going to take you to your trading and profit and loss account. Okay, the heading will be in such a way like trading and profit and loss account. Okay, this will be a heading. Particulars, amount in terms of rupees, particulars, amount in terms of rupees. You'll be closing the heading in such a way trading and profit and loss account for the year ended. This side will be a debit side, this side will be a credit side. Remember, the first one you're going to present is trading account. So here you'll be recording it as your opening stock, your purchases, next followed by that your direct expenses. On the credit side, you will be recording it as sales and then closing stock. This will give you a result of either gross profit or gross loss. If suppose your credit side is heavier, then you'll record here as to gross profit. Or if your debit side is heavier, you'll be recording it as what? By gross loss. Any one only will come into picture. Am I right? Okay. Then you will have the total of your trading account. And remember that if suppose you got a gross profit, you will be recording here as by gross profit. And if you have got a gross loss, then you'll be recording here as to gross loss. Followed by this, you'll be recording all your indirect expenses, and here you'll be recording your indirect income. And now the difference between these two sides, if suppose your credit side is heavier, then you'll declare them as to what? To net
Net profit.
profit. Suppose if your debit side is heavier, then you'll declare it as by net loss. And finally, you'll mark the total of both the sides as equal. Now, on this base only, okay, if you could see, there are only two things to understand. Your trading account will represent your direct expenses. This is what we learned. Here you'll have direct expenses, and P&L account you'll have indirect expenses. And here credit side you'll have direct income, and over here, okay, in P&L you'll have indirect income. So you can see that the direct items is getting clubbed with your indirect items, and that gives you the final output as profit or loss. So that net profit or net loss consists of the combination of both direct and indirect items. Now on this basis only, what we are doing is the first item what you are shown here is revenue from operation, which is your direct item. This is your direct income. The other income is nothing but it is your indirect income. Okay, if you see in your P&L account only, you are showing indirect income. So other income example is rent received, dividend received, okay, or else interest received, commission received, okay. All these things are considered to be as your indirect income, so other income. Okay, when you club these two, you'll get total income, which we call here as total revenue. So we call this as total income. That's nothing but your total revenue. So total revenue consists of both direct and indirect. Okay, your total revenue consists of both direct item and an indirect item. Now comes to your expenses category. Okay, remember, for the expenses category, you need not mug up the items. As again I'm saying it, even for the statement of P&L, the item should be in the order. You cannot change the order as you like. So now comes how to remember these many items at the order. For that, I'm giving you a easy mnemonic. That is easy way to understand. The mnemonic is C P C E F do. What does it stands for? The first C, this stands for your cost of material consumed, which is otherwise we call them as COGS. Okay, this is we call them as COGS, cost of goods sold. But remember, you're not supposed to write COGS. It should be represented only as cost of material consumed. Okay, as a format, it should be only as cost of material consumed. Okay, the first item. And how do you get the COGS? By using only your trading account items. Opening stock plus purchases plus direct expenses minus closing stock. So that means the involvement of your direct item is more in your COGS, that is cost of material consumed. The next, if you see the P, the P stands for what? Purchases. So if you could see your trading account, okay, you could see there is something called purchases as an item appearing separately. So we can say it's a part of your trading account, the direct expense, which has been included over here. So purchases of stock in trade. So what are the stock that you required in your trade activity? The purchase of those items will be called as purchase of stock in trade. Okay. The next one you can see here as changes. Okay, that's taking place in the finished goods. Okay. Next, in the work in progress and stock in trade. So changes in the finished goods or work in progress or stock in trade. This we call them as a direct item. Okay, and it is a item which comes under your expenses category. So changes in the inventories, okay, finished goods, work in progress, stock in trade. And then comes something called as employee benefit expenses. What is the term called as employee benefit expenses? You can see, okay, in your P&L account, okay, in P&L account you record indirect expenses. Some of the example for this indirect expenses are salary is an indirect expense, right? Next, you can pay something called as incentives or bonus. Okay, or you can provide any other benefits, okay, in the way of rent free furnished house. Okay, rent free furnished house. This is for a top level category people. So such type of expenses, salary or bonus or incentives, okay, or rent free furnished house, or insurance on the employees. So insurance premium, okay, insurance premium on employees. So all these are the benefits. Okay, for an employee it is a benefit. In what way? My management is taking care of my health. My management is providing me some incentive for the work what I render. My management is providing me a house, okay, rent free furnished house. So which means they are taking care of my belongings and well-being. So in that way it is a benefit to the employee. So we call this expenses as employee benefit expenses. So by this expenses the employee is getting benefited. it's a mutual understanding between the management and the employees. So any amount that has been spent by the management, okay, towards the employees, then we call those expenses as employee benefit expenses. The next one is something called as your finance cost. Remember the word when we use the word F. Okay, so here you can see we are now completed the items such as CPC. This C stands for changes in inventory of finished goods, all those things, and E for employee benefit expenses. Now we are in the term called as F, which is nothing but finance cost. Remember, this finance cost includes the interest what we pay. Okay, so interest which has been paid on bank loans or on debentures. Okay, so the interest amount what has been paid on the bank loan or the debentures that form part of your finance cost. So you would have seen in your, okay, profit and loss account, interest, if it is paid, then it is an indirect expense. If the same interest is received, we call them as an indirect income, that is other income. So I hope what comes under finance cost is very clear to you. Any doubt in the finance cost category? Any doubts for
No,
finance?
sir.
Okay.
No, sir.
The next one is all about your depreciation and amortization expenses. So in grade 11, you would have learned the term called as depreciation, and even I would have made you to understand what is amortization is. Okay, just for your understanding. Depreciation is nothing but any gradual decrease in the value of what asset? Fixed asset. Okay, so depreciation is nothing but any gradual decrease in the value of fixed asset is called depreciation, and this fixed asset should be tangible. Okay, so if the value of any tangible fixed asset is getting decreased, then the term we record is depreciation. Whereas amortization, okay, amortization is nothing but it is on intangible fixed assets. Intangible fixed assets. That means if the value of any intangible fixed assets decreases, that is due to amortization. Example, if you see for depreciation, it will be as machinery, building, vehicles, etc. These are all fixed assets, tangible fixed assets. Whereas amortization, example, if you see, it will be as goodwill, patents, copyrights. Okay, so all these things we can say the example for amortization. That means they are all intangible fixed assets which will undergo the amortization process when their value gets decreased. Any doubt up to this category of depreciation amortization expenses?
No, sir.
Okay, and then comes up something called as other expenses. When you don't find a place to record a particular expense in any of the above mentioned expenses category, then we have only one source to record, that's called other expenses. So once we have recorded all these expenses, you need to total them, which we call them as total expenses. Now you know very well that how do we find profit or loss? By comparing the revenue, that is income and expenses. Am I right? Here we did, okay, while doing the trading account, what we did, if your credit side, okay, if in case your total of credit side is more, if this credit side total is more compared to the debit side total, then we declare them as gross profit. So you are comparing revenue, income and expense. Okay, or if other way, if suppose your debit side total is more and the credit side total is less, then we declare them as a gross loss. So you are taking into account the revenue and expenses, or income and expenses. The same in the case of even P&L account also. What you did, you found the total of your credit sale. If total of credit sale is more compared to the debit side total, you are declaring them as what? A net profit. If suppose your debit side total is more compared to the credit side total, then we declare them as a net loss. So whether it is a gross profit or a gross loss or net profit or net loss, the items which is taken for comparisons are only your profit, that is only your revenue and your expenses. So I have categorized the revenue into two different heads. They are revenue from operation, that is one of your direct income, and other is your other income. That gives me total revenue. And your direct expenses or indirect expenses has been clubbed together and under the category of expenses, and that gives me the total expenses. Now the difference between the Roman number 3, okay, which is marked as total revenue, and the Roman number 4 is for your expenses. So that means the total expenses which you find here. So Roman number 3 minus Roman number 4, which will give you the net result as profit or loss. So we'll declare it as profit before the tax. If you're getting a profit, then we declare them as profit before tax. Because only if the firm or the business unit earns profit, they are subject to pay something called as tax. Okay, so if you have earned the profit, you'll pay tax. If you have not earned the profit, you will not be asked to pay taxes. So thereby, once if there is a profit, okay, you'll have to declare them that profit as profit before taxes. Okay, so profit before tax. This, okay, you'll be learning even in your BS also. Okay, yeah, under the financial markets. So this is shortly denoted as PBT. PBT is profit before tax. And then once if you've come to know what is a tax value, you need to subtract the tax value from the profit before tax if they're given in terms of value. If suppose they are not given in terms of value, if they are given in terms of percentage, then apply the respective percentage on the profit before tax values and then derive the amount of your tax that needs to be subtracted. So that means less tax. So tax none or if they are mentioned income tax, even that is also the same term. Less tax or less income tax. When you subtract this, finally you'll get a value that we declare them as profit or loss for the period, okay, which we call them others as profit after tax. Okay, this we call them as profit after tax. So before tax, once you get it, you have to check your question. If you have tax payment, then subtract the tax payment, then you'll find the final answer that will declare them as profit after tax. If there is no tax information available in the question, then you can close your profit and loss statement or the format of your P&L with the line item of profit before tax. ஸோ ப்ராஃபிட் பிஃபோர் டேக்ஸுக்கு அப்புறமா ப்ராஃபிட் ஆஃப்டர் டேக்ஸ் காட்டணுமா வேண்டாமாங்கிற எதை பேஸ் பண்ணியிருக்கு, அந்த டேக்ஸ் இன்ஃபர்மேஷனை பேஸ் பண்ணியிருக்கு. இஃப் யூ ஹாவ் இன்ஃபர்மேஷன் அபவுட் த டேக்ஸ் ஆர் த பர்சன்டேஜ் ஆஃப் டேக்ஸ், then you will do the needful and you'll close your answer at profit after tax. If not, you'll close your answer within that line item of profit before tax. Hope the format of your profit and loss is clear to you all, or if you have any doubt, get it clarified. Do you have any doubt? Is there any doubt?
No, sir.
Okay,
No, sir.
fine. Then we'll stop it over here for the day. We'll try to understand the format and the concept of your notes to account and cash flow statement. Then we'll move on to the term called as your major head and subhead, and we keep moving on with the theory aspects. So that's it for the day. We'll discuss more about the other items in the upcoming days. Probably, if time permits, today evening we'll try to have a class, or else will be tomorrow morning. Okay? Thank you.
Thank you.
Thank you, sir.
Thank you, Ma.
Thank you, sir.
Welcome.